All right. Here is January 21st. This is a Wednesday review. Another day of beautiful ATR work. You have to be really good at blending them together. If you blend them together, then you can really catch some good moves. But so you have to like switch your brain a little bit. You know, if you're looking for short term gains, you got to use your daily pivots. If you're looking for a little bit longer, you got to start looking at 30-minute candles. And the bigger picture multi-day. So you could see yesterday we consolidated in the morning, afternoon we broke out, and then today they gapped up. So how do you play this? Again, what you have to do is you have to really compartmentalize your trading, and it does take commitment. If you if oh here let's say it takes a commitment. It takes a commitment depending on your strategy. Like I you got to ask yourself two questions every morning. What kind of day is this? Like yesterday, because we consolidated on Monday in the afternoon. I knew in the morning this was going to be a consolidation morning. The odds are afternoon they weren't going to consolidate it. The odds are you're not going to have a 40-point range the entire day. Maybe right before FOMC, but at the end of the day, that's why you have to break your days, your mornings, and your afternoons in two different segments. So, with that said, you have to understand how the market moves. So for me, I wanted to play today using multi-day pivots because we have this big move, and so I knew that this level right here, this fib, was going to be extremely important for the day's low range, right? And so if you notice right here, I went ahead and switched to a minute candles. So that's why the first 30 minutes is sometimes difficult, because you can use a lot of your mental capital getting chopped up and missing sort of the bigger picture. So right here, what was nice about using the intraday levels right here is we dropped below, right? And we're below VWAP. But they weren't pushing this thing lower. They needed to start going fast. When they started chopping this up and sort of slowly buying it up, and then when they broke it back down, what do you have here? It's a double bottom, right? Or when I say double bottom, as in ideally your short should be right here, right? And you would have been correct, and you would have made 20 points, 20, 30 points. But you also have to remember what's your low from the previous day candle. So here's your 30-minute candle. What has been the low? The low has been right here. Okay, well, 30 minutes is up. What's the new TPO? New TPO, 9 o'clock. What does it do? They drop it. They drop it right down into support, and then they scooped it back up. So then this right here, you can tell. You see how they dropped it and scooped this up? And you see how this 30-minute candle is closing? Well, let's take a look at. Let's take the intraday off. Look at that. This is this pivot right here. So they're scooping it up, and they're not closing the candle above, right? So that's what's really hard with trading is that's why I like these overlay candles. It shows you if we would have closed this candle underneath this, then I would be looking for a retest and then possible continuation down. But the fact that first 30 minutes they scooped it up tells me that this next 30 minutes, which is really hard because again, if you are not paying attention, if you don't notice this, I mean, imagine. Let's see. I'm gonna go ahead and exit out of this, and let's replay this. Imagine this is what you're looking at, right? You would think, oh my gosh, we're going down. Well, you're not looking at the bigger picture, right? Here's your support. It's the fresh of a new 30-minute period. So you always got to be lookout for this. If this gets back above here, then support has been support has been established. So let's go ahead and take a look at the 5-minute, right? So what do they end up doing? Dropping it, closing right here, and then if you even look at these pivots, you see how on the 5-minute, this 5-minute candle, they closed it, they came back, retested this, and then they were gone. So again, let's look back at a 1-minute, and we can even look at it on how your entry would have been more exact. The fact that you saw that they came back up, boom, boom, boom. You don't want to chase this candle, but you need to be on the lookout for that retest of this level. And sure enough, came back down, retested it, they scooped it up, and then they kept on going. What's your next target? Your next target is the fib. So this fib right here, they actually made it to the fib, this first fib on the intraday, and then they ended up going to the +1 ATR, right? So ideally, you want to be aiming from here to here, because that's the first rule, right? You always want to be playing your intraday, even if you didn't have your multi-day. But you always have to be looking out for that multi-day pivot, because especially when we've crossed all these different thresholds. So from there, what do? Rules are rules. You short it. So if you would have shorted it, you would have had a nice move all the way back down into VWAP, right? Not just VWAP, but look, it was today's opening. That's what's important. Your opening of that first 30-minute candle and the lows of that 30-minute candle. That will come in handy. So you see that range right there? So let's go back to the 5-minute. And look right here. The candles weren't closing. What do they end up doing? Scooping it up. About 30 minutes later, they started making their way back up. And then guess what? I was not aiming for an ATR. I was aiming to complete the move, because again, I'm looking right here. Right? So this is where you need to be targeting. And if you did, that would have been a great move right there, Even if you targeted the ATR, great. This right here, that's your move, and you could have that's the easy move. Now, going back, as the day progressed, what do? So actually, let's start looking at these time-wise, because ATR works well with time. So here you have your 9 o'clock candle, right? Right into support. Perfect. You scoop it up. Okay? Where's your 10:30 candle? 10:30 candle starts right here. Where are we? We're not even near a level. So we're right in between. So in reality, you're risking. You want to use VWAP to risk, but in reality, you're risking. That's why you want to have this low right here. This is important. That opening range, right? And it subsequently VWAP came right to it as well. But if you were going to go long here, you had to almost risk down below this pivot, because remember, pivot to pivot. They could have easily dropped this down and scooped it back up, but you never know, right? So here you go. You got this consolidation, and then where are we at? 11 o'clock, right here. So I'm anticipating by 12 o'clock they're going to be making their full move. So what do? Right at 12 o'clock, right before they hit that candle. What do you do at that time? What's the rule? You're at a pivot. Do you go long or short it? You short it, right? You had actually it was 3-point drawdown. A 3-point drawdown from here. What happened at noon? They dropped it. It's just systematic every day. Look at your timing. Where are you at? Support, resistance. Where are you at the pivots? Okay? Where are you at? You short or go long. Well, you know what? You short right here. I don't know. I can't predict what the market's going to do. I don't know. It might have blew through here, right? If they blew through here, then where can it go? Okay, you just hit a mid ATR. That's a pretty major level. So if they go through this, then the next level would be right up here, right? And that's pretty extended. You're already past a +1 ATR. So you would go all the way up here, and that could be, but we've seen it, right? You can trend, but you know why I wasn't convinced? Is a measured move. Look at this. From here to here was 350 points. Consolidation, where do you think it is from here to the next 350 points? Uh-oh. There's your 350 points. Measured move. It's the exact move that they made on Friday. Monday, Tuesday, consolidation. Wednesday, complete it. And now what do? They come back down. So, yeah, I make it sound like it's easy, but it's not. Why it's not easy is because there's some days where it requires you to scalp, and there's some days require you to hold. And you have to be, as a trader, you have to be able to decide what the day is. Is this a scalping day or a trading day, a trend day, or range day? I don't say trend. Yesterday in the morning was a scalping day because it clearly showed that you're in consolidation, right? Today you had this huge gap up. There was a lot of room. So you needed to take it slow, compartmentalize things. But look at this. Even though you could see that after that point, it was following a trend. What ends up happening, just like over here, when it breaks out of a trend, it always retests before it continues. Okay? Breaks out. So even if you miss this move, look at this. 12 o'clock, drop down in a VWAP. What do? Scoop it up. What do you have? Now you have this ATR. So let's get rid of the days. Actually, that's the day. Let's get rid of the multi-day. Let's go play right back into that range. Okay? So you can also look at this as a fake on an intraday levels, right? Now you had the multi-day, but look at this as an intraday. This would be technically considered a failed breakout reversal. Look, you broke out, and then the next 30-minute candle, you dropped it. They dropped it. So that's a failed breakout of a level of an ATR. So then what do? They scooped it up. If you missed any of that move that came down, sometimes it's hard. I will say this. Sometimes it's hard to short when it looks like things going to keep ripping, right? So don't short this. This right here proves that there's plenty of opportunity, if you miss out on a move. As in, if you missed out this entire move and you waited all the way right here, you could have got in right here. And look, it actually did come across. But let's see. Came across. And it was about a 10-point move. So if you would have got in with a 10-point stop, you never got stopped out. But remember, why would you be getting in at the last 5 minutes of the day? If this thing would have held above here, then you see how that wick closes above? Then this thing could actually, I've seen it before where they shoot it down, then scoop it back up, and then they continue again. So what do? You wait until the next TPO, new time period. What is it? 12:30. What's significant about the 12:30 period? Look over here. It's a new 4-hour candle. So look at that. Right at 12:30, we are below. Are we above or below? We are below the pivot. So you short it, no questions. If you would have done that, that was the high for the afternoon. And you can see right here on that 4-hour candle, it was the high. And where do you target? I actually got into this. I got in. I'll tell you this. It's a funny story. I predicted this. I got in here with one contract, and I was going to take a screenshot or just record it. One contract, and I had it as my target at 60.40, which is down here. But I ended up selling it and leaving to go have lunch with a buddy, and I should have just kept it, Now, when I got back from lunch, it was right here. So I actually ended up getting in here and completing the move. But you see how stress-free that would have been by getting in with one contract at a specific time, 12 o'clock like I've always been teaching, or 12:30, and that would have been a 153-point move times 20 points or $20 a point, which is $3,000, one contract. So I would have left for the day and gone to have lunch and enjoyed my life. And the saying how it goes is you're gonna make money or you're not gonna make money, and this is the optimal position, right? Because you're at that multi-day area, so you're either gonna make a lot of money or you're gonna lose $200. So, but because you're over managing the position, you get in at bad spots or you get out at bad spots, right? Instead of just holding. So why do you target down at 153? Well, that was the low of the day, right? And so you see how the afternoon, how everything sort of played out very well. And technically you should be targeting the bull pivot, right? Once you break the mid ATR, you go for the bull. But you know what? It actually didn't make it. It actually ended the day right here, because you can see right at 3 o'clock Central Time. This is the last 10 minutes after market closes. They actually ended up dropping it down into the ATR pivot. So that's why the last 10 minutes can be sort of frustrating. You may know what it's going to do, but it may not do it until after market closes. So either way, that's not the point. The point is, you see how these candles, the 5-minute candles, aren't closing. You see how they're reacting, right? So see how it's reacting around VWAP. So what do? See how this was an important level. So it came down, rejected off of this, and it needed to flush. That's how levels get broken, is by flushes. If it doesn't flush, you see how this didn't flush, then you're going to start bouncing around. But you got to prepare for this. You can't be chasing, right? You have to be getting in short right here. And look, it's a new TPO. So it's a new 30-minute period. You're below VWAP. What do? You short and you hold. It takes a while. 5, 10, 15, 20, 25. You got to wait 30 minutes. And that whole 30 minutes, it made that move. And then look, it bounced off. There was only about a 5-point drawdown. And what does it do? It goes back up to that 690 area. Why? That was the opening day. Then what did they do? They rejected it. Then what did they do? Now you're starting getting a chop. So you see how now we're in another downtrend. So this is the plan for tomorrow. If you look over here, you see how you have this this ribbon. Very well this thing can actually hold and reverse. I actually hope they do, because that's when you get range. You get range when it's unexpected moves. So if we end up gapping back above this 640 area, then my target would, one, be this 720 area, but back at this area right here. This, look to the left, would be 120 point. That would be my range for tomorrow. Ideally you would go back up to there. They may not do that. They could end up just going as far as here, and then that would be Thursday, and then guess what? Then Friday they end up here, and then this would be your Friday play, and then that would be the end of the week, right? And that could possibly be a double top for the week, and then next week it's FOMC. They make the decision whether they end up dropping it or they break out and they continue even higher than this. So that's how you play that. That's the upside. So you see where I'm looking at. You use the previous day's trends to help you with the next day's moves. So my line in the sand for the upside is the 740 area, and then to the downside is if we end up gapping below the low of the day. This could go anywhere, right? If they end up dropping this down tomorrow, below the EMA, this could be very violent, because ideally this is the line in the sand tomorrow. 470. This was the breakout point. If for whatever reason we break below here, yes, this is important, but it's this zone. If we break anywhere below this zone, this is going to be pretty violent, and they could end up taking this all the way down. And I've seen them even come all the way down to the mid-range on the opposite side. You can have mid-range up, mid-range down. So is that likely? I don't know. Usually if this ends up happening, they're probably going to gap it below, right? But this is what I'm trying to teach you is this is how you plan. You don't want to wake up and be like, well, I don't know what it's going to do. You know, I'm scared to trade. It's like, no, let the market breathe. Let it tell you what it wants to do. There's plenty of time to get back in. If you got chopped up in all this, I mean, look, even if you miss this, I mean, plenty of opportunities. Short, long, short, short. There's plenty of opportunities, but you need to compartmentalize between levels and watch your sizing. This entire day, I think I ended up making $2 or $3 grand in a couple accounts. But guess what I did with one contract? It was so easy to trade. Just getting in, not even worrying. Okay, I got stopped out, lost $200. Okay, I got in profit, made $1,000. Right? It's so much easier to trade because if you trade with one contract, then technically you're trading the chart. You're just getting in, just have skin in the game, and there's no pressure. If you just start trading with 4, 5, 10 different contracts, emotionally you will wreck yourself. And time again, I've proved that until you get to a level to where, say, 2 contracts is nothing, or 10 contracts is nothing, but you got to keep it small. So anyways, that is the review today. But this was an amazing day because you see how the system works. The system works off the pivots and timing. 12 o'clock, 12:30, 10:30. This is your 9 o'clock candle. Your 9:30. Where are you at? There are all sorts of different plays involved in this. And then if you looked at the ribbon play beautiful as well. Right down the ribbon in VWAP. When we crossed over the EMA and over VWAP, that tells you this thing is toast. And you get in and you just trust that it's going to stand under all this, and you just risk to the lows. Really, that should have been the day right there. This right here, if you were playing the afternoon, this was, let's see, that should have been it, and it's 120 points. And if at any point you're missing all this, you should just walk away because you're reacting to the market and you're not trading. You're not anticipating what should happen, right? And at that point, you will just mentally exhaust yourself. And it really should only be playing one of these plays and then calling it a day, But when a day like this happens, sometimes it's nice to just get into all these different moves because there's plenty of opportunities for to really grow your account. So, anyways, hope this helped. You see how using these multi-day pivots and intraday pivots together will help you overall.